Good morning and welcome to the Early Bird. And here we're looking at BHP on the New York desk as an ADR. And as you can see here, well, it's closed lower than it opened. And the morning session for this was up, the afternoon session was down. And this is partly due to the Dow being sold off, of course, in the last hour. But the base metals, especially the copper, was down very strongly as well, as we've been looking at before. As you can see here, that it's really sort of pushing to the downside. The wave count at this point down here can allow for this to move back up. As we pointed out here, this can be a 1, a 2, a 3, A, B, C for the fourth, and down for the fifth here or here. I haven't actually pulled that apart there, but what we can say is that, when you're looking at this trend here, we can see that the trend is actually expanding in terms of this move down here is it's whatever length it is. This one here is longer, and this one here is longer and also quicker as well. So it's really got the personality of a what we call in a third wave. So when we're looking in a structure like this through here, it's the center of the structure, the third wave in the middle here, up for 1 and back for 2, up for 3, and in from this second wave here to the top of the third there would be 5 waves in that, in terms of 1, 2, 3, 4, 5, and then even in the third here, what they call the third of the third, because we're in up for 1, back for 2, up for 1, back for 2, up for 1, back for 2, and it's that third wave in there that really kicks it out. And that's kind of what we're sort of looking at here. So this is sort of really sort of pushing to the downside here. So this, our market and the Australian dollar, will be pulled by this here. There can be, I think there's probably, I don't know, maybe, well, it was about 80% relationship between this and the Australian dollar. But we'll see. I think that's probably a little bit sort of less now, but there's still a lot of pull there on that. So, yeah, but we'll come back to, we'll come back to that in a moment as one of the drivers. But the US BHP here is in a weak position, and as I mentioned before, this particular pattern through here is corrective. And what we're seeing in some of the Asian markets now is we're seeing this market pulled under this old low here. So if we have a look at this is the FTSE here, the FTSE 250, not the 250, not the 100. But this is definitely a correction here, and this low should be taken out here. But I wanted to have a look at the Hang Seng, because in this market here, in the Hang Seng here, we can see that that low there that we've been talking about is being taken out here now. Do you know what I mean? So that's the 2,000, that 20,000 there. So that's that's going to be the resistance. And yes, it can snap back from here. But point is that this sharp fall here has been taken out. That's what we're sort of looking for, even on our local market as well, and that's in the Shanghai market as well. That's also happened here as well, and the medium level here is 2.5 here. So this is this is a bearish trend in the Asian region there, and there is a relationship with Australia and England in terms of business, and there is the SPY and the FTSE, they move exactly the same. They have got the same sort of personality, just the FTSE's 10 times bigger. If you've been trading futures contracts there and the SPY, then you'll know that the intraday play is the same in terms of the opening squeeze and covering gaps, and very identical markets there. So yeah, that's just the important part there. But on the flip side of that, we've got the US markets here. It's been sold. This is 1 hour chart here, all sort of squashed up, and a bit of a triangle sort of pattern that we've been sort of looking at through here. But we've also been looking at this in terms of a flat or a triangle in this larger picture here. But we sort of were expecting another sort of high to come up through here, and that's come into play there and been sold off. It may not be the end of it. We need to see a really good retest of the 11.5 there to be sort of locked in there, and then moving down. Now, on this moving down through here, if we can see the market move under 11,340 on the cash market, on the index, then we'll see a further weakness in that. Would see like at least one retest in there, but it's still early days, and we're still dancing with this particular top here. And one of the main things that we need to focus on is the meeting tonight, the FOMC, where they probably be talking about the so-called twist, which is basically pumping money into the bonds market. And if that doesn't work, then they'll look at the QE3 after that. But that may not come around. You know, when you put money into the system, it takes quite some time for them to really sort of analyze that and see the results of that. So, because it's got to dribble, they're basically putting it in the top of the pyramid and it dribbles all the way down. So, you know, that may not be until next year. So, anyway, for us as traders, we need to just allow this to continually play out. And I know that we've been doing that all the way through here, and I know it's boring, but, you know, what do you do, you know? So you just got to sort of stay with it, because after a correction comes the trend. So if you fall asleep at these critical points, then basically you miss what's sort of going on, you know. So, but as we're sort of looking at this market here pushing up quite strongly, I'll just sort of flip over to just want to flip over to our market actually on the SPY there. So I'll come back. We can see that our market hasn't really pushed up and made new highs at all, has it? You know, in fact, we've got this. I've relabeled this structure down here for this to be wave one down here, but that doesn't need to be the case either. It could still be the way that I had it yesterday, as this being wave one down here, in terms of down for one, back for two here, down for three, 4, and 5 for one here. Then this is an A and a B and a C wave to here, and that would be the high there. Then this would work down. But I just want to allow a bit more space for that a possible gap to be taken out here, and from that FOMC meeting to tonight, in case there's a sharp sort of rally there in that market. So we need to get past that that point tonight. So there we go. But as I mentioned, we've got Asian markets that have been breaking their new lows. Yes, they can snap back, being oversold when you break new lows. So, but you know, we'll see there. So, but covering this gap, this is definitely an impulse wave to the downside here. This is also a little impulse wave to the upside here. So it's either wave C of this structure of this A, B, and C here, or it's an A and a B and a C wave back to here and then down through there. But we should eventually get closer and closer to the 4,000 being taken out. It really, this whole pattern, not just this one, but the before that as well, in terms of just snap back to this picture here. This is the basically the SPY as well, or the cash market with the SPY included overnight. This particular pattern here is corrective, and we understood that. And this is like an impulse wave down here. So we do need to see the market work lower from this point here. If we're going to get something back up here, then we've just got a larger correctional pattern that we need to deal with, and that will be a little bit boring. So we do need to see it come down and you know, move through these lows here now. And the copper market, the base metals market, could do that. So we'll see how we go with that. Okay, so the S&P 500 up here is the same as the Dow, and we'll be looking for, from this point here, as in terms of a flat pattern, we're looking for a 5-wave structure up through here, and that's pretty much it already there now. The third, the fourth, and the fifth. So that can certainly be the top in there again. But once again, we need to see this play out, and that meeting tonight is certainly going to spike the markets one way or the other. So need to be careful. So do not overtrade today. The UK markets, this is the UK 100 here, and you look, it's supported on the 5,000. That's that's the buyers there. It's the price is supported. This particular pattern here is corrective and would see further downside once it's finished. It's just a matter of working out what this triangle pattern is and when will it fold over. And it could certainly be folding over now, because we looked at 5 little waves coming down through here, so this can be the retracement back through here. So any move to the downside here, then first of all we would be, as a trade, you would be looking for the 5-3 to become the resistance, and then you'd also want the 5-2-7-2 as a retested resistance as well. Okay, so you really want that to be in there. Then you would use the 65 to get a position, and then you would wait for the midpoint, the 52.50, to become the resistance after that, before adding further to the downside to get the break on that there. So yeah, just, that's at this stage here, this market, this price is actually searching for support on the 5-3. So it will vibrate between subgroup 1 at the top here and subgroup 2 below it here as well. So you need to use those levels there. But like I said, don't fall asleep towards the end of a pattern here. And this pattern here is ending in one way or another. It could end up as support and go this way, or a bearish pattern and go this way. This pattern here is suggesting that it is going to be bearish, but we don't marry opinions. We use support and resistance to trade off, and that's what we're looking for here. So getting closer and closer, and obviously this is going to fit in with the Dow Jones and the rest of the markets there. So as mentioned a little bit earlier, we've got the copper market, really streaming down through here. Yes, this can snap back through here, but we've got this certainly this sort of bearish picture in here, and this is going to show up in our market, especially in the materials sector there, as it is showing up in BHP in the US there. The oil market, now we were looking at this yesterday, and we knew that we would get a bounce off the 85 there as support, and we just need to allow that to play out. The 88 is the norm for the retracement level there, so we'll see how we go with that. At this stage here, this move down here so far is in 3 waves in terms of this 1, this 2, and this 3 here. So this is likely to be a 4th wave here, and we'll see a 5th wave come down. But as it stands at the moment, this is a 3-wave correction here, and that is a corrective pattern. So it can certainly move up from this move up through here. But I doubt it if we'll see a new high come in through here. But we do need to see a nice clear 5-wave structure here. Once we've got that 5 waves here, coming down from here down to here, then we can look at a 3-wave counter trend and then another 5 down. If we get 5 waves here, then we'll get another 5 over here, and hopefully that should line up with base metals, and also the Dow finding a top up at that end there. Now the gold market, there's no real sort of change in here. The 1800 is the line in the sand. Yes, we are expecting it to move up, but it can also move further down to these old lows here as a C wave here. But so what we're going to do is we've got the 1800 here. If the 1830 becomes support, then we can trade long, okay? If the 1772 becomes a retested resistance, then you can look at trading short. So while it's in this little space here, you just need to be sort of careful. You're not going to get a trend out of that. Sure, you could focus in there a bit closer and so forth, but even scale in through these little, finding support on the 1800 here on a 5-minute chart, and then onto this one here, and you can build a position in that way. But still, at the end of the day, it's about the 1830 finding support or the resistance through here. So if this came through here, through there, then it would retest here and then go down. Now the FOMC meeting tonight may trigger weakness in this market here. So if that was the case, then you would need to set up a stream of orders to the downside here with stops up above the 1833 there, or even lower as well. But you would need to place those orders in the market there, and also some take profit orders down around the 1720 if that was going to have a sharp move to the downside there. So anyway, that's it's one play that can be looked at. Setting orders up in front of a market is the way to go, because you know, if they get triggered, then you're on the right side of it. Then it's just a matter of managing the risk, and to get that free trade to break even as quickly as possible by taking some profits and allowing the rest of the trade to carry on is certainly one way of looking at it. But yeah. Okay, so the other key factor here is the US dollar, and we knew the US dollar would be hitting at 78, be having a reaction from the 78 there, because we've had this 5-wave structure up through here. What we don't know is, we don't know if that how far this is going to pull back to here. It does appear that we've got an A and a B and a C wave coming back, but this looks like it can just come back further, because we've got 5 waves down to here. Then yeah, 1, 2, 3, 4, 5, an A and a B and a C back to here. So this could be down for 1 and back for 2 here. So we can, you know, we can come further down here. So while this is coming down, then that's going to give strength to the indices to push to the upside, and also for the euro to push to the upside as well, and the Australian dollar, because as I mentioned, we were looking for a rally in the Australian dollar because we'd completed that move. So this is a very important point here. We can look at this support area in here as being the sort of support here, but it can come back lower down here. We just don't know what we've got here in terms of this larger pattern here, and I'll just explain that again. We can have this top of wave 1 in here, so this can be the ABC into here, up for 1, back for 2 into here, covering the gap, and then moving up strongly from that point. Or we've got a larger ABC. We've got the A wave, the B wave, and the C wave taking this low out down to here, and then moving up from there. Hopefully it's just this situation here. I can move up from there. It may already be into play here, but this is looking a little bit sort of bearish, this pattern here, corrective. So we'll see how we go with that. But yeah, we just have to sort of wait that out a little bit. With the euro here, there's 2 possible wave counts. Check the charts a little bit later. If the 137 here becomes support, then you want to be scaling in on support on the 137, the 10, the 20, and you know that if the 30, the top of subgroup 1 or group 1, finds support, then you can look to the midpoint here and possibly higher. But you'd want to be covering your profits into this area here, the 72. This is where the supply is here. If there was going to be a move up there, you can look at this structure here being grab that structure there as the distance from this point down here coming up there. So the same, there'll be some equality within the correction there. If not, then you need to be short as a retest of the 13672 there becomes resistance. Then you want to be short from that point, because we'll be going down further through there, and then this would be the A, the B, and the C wave to this point here, and the market would roll over from here. So that would be down for 1, an A and a B and a C back up into here, and then rolling back over from there. So that's a real possibility. It's a bit much the same with the Australian dollar as well. With the Australian dollar here, from this high up here above the 107 up here, we've seen down for 1, back for 2, down for 3, back for 4, and down 5. So what we're looking for here is a rally from after these 5 waves down through here. So we've got the beginning, the middle, and then we can see the ending structure down here, sort of reluctant to go any further down. You know what I mean? It's all this sort of stuff and bouncing around and so forth, basically finding support in here. So the rally can come back up to test the supply levels up here. It's a game of supply and demand, and little battles within all of that. So this level up here, first of all, brings in the 105, the midpoint here. So that would be something to aim for. Of course, this moving up through here, it would help, not necessarily, but certainly help the ASX 200 move higher as well. So that's a bit of a problem, but we've got the copper market moving to the downside, and there is a relationship between this market and the copper market. You know, we may not see this get up there, but we have to allow, because we got 5 waves down, then we got to look at that up there. So this may just may not get back up. That may just sort of sit flat. Now, if copper does bounce from where it is now, then we will see this bounce back up. And that's why I mentioned yesterday, keep an eye on the copper market. But this little move in here, if we have a closer look at this here, would be looking at like this. So we would be looking at this in terms of an impulse wave to the upside there. You can see the beginning here, you can see the middle in the middle here, the third wave stuff, and the ending structure here. So now we're seeing some sort of corrective pattern unfold in here. So that may be support there, or we may see it back down in here where there's support here. But, you know, if the 72 becomes support, then you can scale in there, exit there, and wait for the 103 to become support, and then move back in through over there. But across the 103 here, you would have to expect the trading levels classic pattern, which would be the arrival, the support, the first high above the level, then the A, B, and C across here, then support, and then up through there. So the classic trading levels pattern is what's unfolding through here. So you'll know that, and that will help with your market timing. So make sure you understand that particular pattern through there. But don't buy right here. You need to wait for these to become support here. Yeah, so, well, that's sort of it in a nutshell. We're still waiting for the US markets to play out with their high. We're not really seeing our market, the ASX 200 here, it's not that strong, as you can see. We've got corrective patterns to the upside, we've got impulse patterns to the downside, so we should be going down further. And the copper market can help us drive that. We just got to keep an eye on the rally on the Australian dollar to see what money comes in from there, and how the Dow sits up above up around the 11,500. It's under that at the moment, but being above it or under it at the moment is neither here nor there. We need to see some good solid retests of that 11,500 for it to show up as resistance, or we can look at the wave structure to the downside being an impulse wave. But on the index, a move under the actual index itself, a move under the 11,340 would be the first little sign of at least a bigger bearish pattern happening at that point there. So we'll see how we go today. SPY traders need to be aware of that gap there to be covered. This gap here was covered, that was created on the S&P 500 yesterday, lose track of time, but that got covered for the S&P 500 and the Dow, but it hasn't been covered here. So we need to look at that situation there, and if that is the situation, we'll be looking at this as an A and a B and a C wave up through to here to cover that. If it takes out this top here, then we've got a larger correctional pattern that we need to deal with. But fingers crossed that we'll keep continuing to see lower highs come into play and place pressure on the 4,000 here. And if this does go through here, then we'll see it go back up and retest it there. And, you know, it may not find it as resistance straight up. It might move back up to here somewhere and then come back down. But once penetrated here, it's kind of like putting a little hole in a brown paper bag. It just gets bigger from that point there. So because it takes out the stops, of course, and they will be looked at by bigger players for sure. Alrighty, well, that's it. So we just got to sort of sit tight and allow things to play out a little bit further. We're kind of getting there, because last week we kind of had all these short positions in the market. We still got them there. We were wanting to get through to this week because we felt the markets would get a bit weaker. They have done on the Asian markets, not so much on the US markets. But we are one step forward, sort of 2 steps back and 3 steps forward, so to speak. So we need to keep sort of edging in that particular way until we're presented with a different story. So we're just basically following the story, which is the trend, and we'll continue to build on that. And the object of the game is to get through with our shorts to next week, and get that little sort of get a bit more sort of ground, a bit more traction on our trades, and in grip into time a little bit more as well. So we'll see how we progress with that. And as I mentioned, the Fed's pumping money into the bonds market is something that we need to get through, and it's a bit of an unknown sort of quantity, but we'll see what comes of that. So don't overtrade today. And if you're holding positions overnight. Alrighty, I probably won't put any more trades in the markets because of this meeting tonight, unless we see really strong downside. If we see sort of up here to cover this gap, then we need to allow that just to play out, and we'll take it from that point there. But otherwise, a move into this area down here then we can pretty much look at this being penetrated down through here. So we'll see how we go. Alrighty, well, good morning and good luck. Oh, and just by the way, we've got some programmers having a look at the Profit Keeper as well. If you've been having problems with that, can you send me your problems, and I'll probably get the programmer in India to contact you directly to sort of work through what the problem is. I know that we've got 3 or 4 problems, but I just want to gather all the problems so we can create solutions for them. All right, thanks.